Precious Metal Summit Europe. Welcome, ladies and gentlemen, to day 2 with Commodity TV, and we have Impact Silver here. Frederick Davidson, the CEO, is with us, and we did the interview last year already in Zurich, and now we are online. Frederick, good morning. How are you doing?
Oh, not too badly. It's good morning is right. It's about 2 o'clock in the morning here.
Yeah, for you it's a nightmare. That's right. I have 11 o'clock here in the morning. That's okay. Yeah, very appreciated that you got up that late in the night here. And yeah, let's face it. We should do an update here for Impact Silver. And of course, first of all, I want to know, how was silver production 2020 so far in light with the COVID happenings worldwide, and how has the company developed here?
Oh, not a problem. As you know, we in 2016, 2017, the price of silver took a bit of a bath. And what we tried to do is, well, first of all, we tried to up production to try and reduce our average cost. We found, in fact, it really didn't reduce the average cost, but it did reduce the average grade. So as a result, we tried something that's sort of counterintuitive. We cut production way back, but focused on our higher grade mines. And the end result was we didn't produce a lot of ounces, but we did produce positive cash flow. And that made it somewhat unique in the mining business in those the last couple of years. That positive cash flows worked very well for us. And as the price of silver is now getting quite a bit stronger, we're going to go back into those more marginal operations, which are now less marginal, and recommence production from those sites. So we're looking at the situation that 2019 was basically the turnaround year. Positive cash flow, positive EBITDA, but losses. 2020, we've experienced to date the growth. And then, as you may know, in Mexico, there was a shutdown for basically 2 months for this COVID-19. Regardless, in fact, in the second quarter, where half of the quarter was shut down, we managed to get to the point where our loss was only 200,000 and a very positive EBITDA, $500,000. And even more positive cash flow. This quarter that we're going through, I think it's kind of apparent we've had a fairly clear run. We've got some good prices, and I'm very positive about this quarter that we'll be releasing in about, I think, 4 weeks' time or 3 weeks' time. But more than that, what we've done is we're now going back into those workings. We're starting to bring our principal mill from where it was down below 400 tons a day. We're going to push it up to 500 tons a day. We're looking at Capire, which was a shutdown 6 years ago because the price dropped at that point in time. We're looking at bringing it back into production. Minimum size would be 150 to 200,000 ounces.
That's an open pit, right? That's an open pit, right?
It's an open pit. It tends to be, it's a volcanic massive sulfide, so it's a polymetallic. It's not totally tied into silver. And the end result is we needed that combination of improved silver and improved base metals to make it work. And there's a couple of other immediate targets in the area that we may even scale Capire up. Now, that would take about a year and about $1 million, but you'd be producing at 500 tons a day rather than 200 tons a day.
Yeah, that was also one of my questions. Would it be possible to bring that in 2021 to 1,000 tons per day?
No. The problem is the 1,000 tons a day is going to be a whole new plant.
Okay.
500 tons a day for about $1 million, we can get it up and running at 500 tons a day. The other side is we've got the Capire deposit itself. It probably can be expanded a bit than what we have. On the other side of the hill where Capire is located against is another deposit called Aurora Dos. It needs more drilling, but it could be integrated into the Capire. It's about the same size as Capire. To the north, there's another deposit. We've only got 6 holes in it, but it's called Manto Rico. Again, a look-alike for Capire. It needs more drilling. And I would like to do that before I decided on the ultimate size of the plant. And because 200 tons a day with the current Capire deposit, we'll be there for 40 years. Nobody wants to wait 40 years. But at the same time, I don't want it to up it to 500 tons a day and find out it should have been 1,000 tons a day because of these other deposits. So very exciting in the sense that we will be producing at 200 tons a day regardless, but meantime exploring to see the ultimate potential of that deposit.
Okay, super. So also I saw the Carlos Pacheco zone is or will be brought into production. Let's face it now. What is the plan for 2021 to grow production, and how much will it cost, of course, or do you have that already in place?
Okay. Well, first of all, we're well cashed up. We've got $17.5 million in the bank, Canadian dollars. As a result of a recent private placement, positive cash flow from earnings, and the end result is we're in a good position to take on most of what we're looking for. Carlos Pacheco is only indicative of something bigger. It's right above a valley that's about 500 to 700 meters below our current mill. And in the bottom of that valley is a very large high mag anomaly. And radiating off of it to the north are a series of veins. Carlos Pacheco, when we first looked at it, we thought it was unique. It's not. There's multiple veins running off of it. To the south, we ran into a disseminated gold target that we're just working on. In fact, I think we'll be pushing it forward very quickly. We're trenching it right now. I think there was over 22 samples that ran 30 or no, I'm getting them reversed. 30 samples that ran over 2 grams a ton gold on surface in channel samples. So obviously that one we're chasing. And what it suggests that this high mag anomaly in the bottom of the valley is sort of the driving force for a lot of this that's coming up. To the south, disseminated golds. To the north, veins. Carlos Pacheco is only one of those. And as a result of Carlos Pacheco, we initially thought it was sort of unique. We've now found that just north and west of it is an area called Chapanel. We've done seam sediments there. We've gone in and we're doing outcrop sampling just now. The best outcrop sample we've had to date, and this is very early stage, was 0.8 of a meter, but it ran 97 grams gold, 97 grams silver. So highly anomalous. It's a target-rich area, if you will, and I think it's going to be combined with Carlos Pacheco. So I'm not sure if we'll even produce Carlos Pacheco by itself anymore because of the much bigger target that we're working on.
Super, which would make sense, of course, because it would bring costs down, right? But you can include more.
You're bringing your logistics in, will service one area, one big area, rather than trying to just service the Carlos Pacheco mill, or mine rather, and you're scaling things. Carlos Pacheco is one where it's a vein, and with veins, you're always stuck between development and mining. When you're developing, you can't mine. When you're mining, you can't develop. So you're limited the amount of tonnage you can take out at a time.
Yeah.
But if you've got 5 or 6 veins, you do them sequentially. And what you'll be mining in one, you'll be doing development in another, and you can then feed a common source. So Carlos Pacheco is indicative of what we think is in this area. It's quite exciting because gold we haven't been chasing. As you know, 90% of our revenue is silver based. We don't need equivalents, but we do have another 5% of our revenue is driven by gold. And I'll never apologize if I'm sort of contaminating the silver stream with additional gold.
Okay, super. Last question. So for next year, what is your, let's say, wish plan for production? Saying how many ounces of silver you want to do and at what AISC cost you could imagine?
Right now, I think our silver production would probably be the scale to, and these things are always graduated. You don't turn a switch. We're hoping to get it back to about the 900,000 ounce level, which is up almost 50% from where we are.
Yep.
And by the end of the year, I'm hoping that we'll be then adding on additional production both there and at Capire. We're focusing sort of 21, 22 to get up to about, from just local sources, sort of 12 to 1,400, 1.4 million ounces. And I might even stoop to using equivalents if we have too much gold contaminating the silver stream.
Yeah. Okay, which is a luxury problem to have. So, and at what cost do you think you can produce that?
Well, right now, everybody refers to their silver, at $7, $8. That's not sustainable. We always use sustainable costs. What's the cost of replacing that ounce you've taken out?
Of course. Yeah.
And realistically, all in, including your GNAs and what have you, we think $16, $17.
Okay.
It could be a dollar either way, but realistically, $16, $17. And of course, that makes it highly leveraged to the price of silver. When silver goes up, we get a 5 times leverage on it. Silver goes down, we can constrain ourselves like we did in the last 2 years and simply say, okay, we'll lower our costs, but we'll lower our production.
Okay, super. Thank you very much, Frederick. Time is over, and that was great. Thanks for taking the time for the interview. Wish you all the best, and we want to see you above the 1 million ounces production for sure.
Good talking to you.
Thank you. Yeah, ladies and gentlemen, that was Impact Silver, Frederick Davidson, the CEO for Precious Metal Summit Europe. And you heard it, the company is on the growth path. They want to grow the production by 50% for next year. And yeah, all-in costs approximately $16 to $70 per ounce. This is quite realistic, I would say, conservative approach. And the company has $17.5 million cash in the bank. This is also fantastic. Lots of potential, lots of projects. Check out the company. Thanks for watching us, and bye-bye from Switzerland.
Cheers.